All right, we are live for the Friday edition of the Mike and Mario Show. Excited to be back, and wow, what a interesting day it is. Mario, how you doing, my friend?
I'm doing well, Mike. Yeah, we're seeing mayhem in the stock market, and I would say the bond markets all around the world.
Right, definitely. So a lot of things is happening. Stuff is definitely hitting the fan right now in multiple areas, and yeah, so we got lots of things to cover today. Hope everyone's doing well. As always, want to make sure that you guys throw out some thoughts, ideas in the chat, and then we'll get to them as we get throughout the segment. But let's just start off right now with the indexes or equities rather, and yeah. So right now, man, lots of green not sorry, lots of red
Yeah,
out there. Lots of red out there, man, and definitely not too surprising because I was anticipating as a result of the numbers given to us today, the fraudulent CPI numbers, that this type of activity would happen. But it's just the other things that's starting to trickle down as well, as far as a lack of confidence and sentiment and you name it, man. It's all starting to come to a head now. But just a quick glance and see all this red here, it's definitely not a comfortable feeling, I imagine, for those that are solely relying upon the different mutual funds and all the products that have been packaged up with these products inside of them. So, but yeah, this is where we're at. And I remember hearing, watching a lot of other commentators talk about the meltdown. And so definitely this stuff right here looks like it's in that, in that ballpark there. But we'll see moving forward how things play out. But another thing, Mario, that I didn't mention that I want to just bring up real quick, if I may, I was looking at just around the world, and let me pull this up real quick. And here's my other little measuring tool. And I looked at all this. So we got all these European and US, but then you go to Russia, and the RTS index as of today is up 4%. So I'm saying that maybe those sanctions aren't doing what they were supposed to do, or
they're not.
or maybe we've been lied to. But
Definitely not. And the Russian central bank cut rates a week or two ago.
yeah.
Last week, the dollar rallied to like 66 against the ruble.
Mhm.
But now the ruble, the dollar's dropped back. We're now at 57. So
Mm.
even though the Russian central bank withdrew that 5,000 rubles per gram of gold
Yeah.
deal, I think that just the fact that they did that gives people, raise some eyebrows, and people notice that, and it puts a floor under the ruble, because if the ruble gets under pressure again, they could always wheel that 5,000 rubles per gram deal again.
Yeah.
So yeah, very interesting. And aside from the sea of red in the stock market,
Mhm.
we're seeing a sea of red in bond prices, not just in the US, but especially in Europe,
Yeah.
Italy, even in the UK. I was speaking to you before we came on air that the 10-year UK gilt yield has gone from zero point 0.7 to almost 2.5% now in 1 year. That's an
Mhm.
increase of 3.5 times.
Yeah.
In the US, the 10-year yield has gone from 150 beginning of the year to now 315. This is going to hurt the economy.
Mhm.
And the problem the central banks have is that they've lost control of prices.
Mhm.
People call it inflation, but I call it prices. They've
Right.
lost control of the expectations, the public's expectations
Mhm.
of how the central bank's doing.
Yeah.
So they're in real trouble because they're going to have to keep raising rates
Mhm.
into an economy that's slowing down. And you sent me something about the Michigan consumer sentiment. Maybe you want to bring that up.
Yeah, let me go ahead and grab that. Yeah, definitely not let me grab this article here. It's definitely not good news overall, but we're not surprised one bit in reference to the figures that's coming out. So here we have, I'll just put this on the screen real quickly. And so University of Michigan Consumer Sentiment Index is at 50.2. And on here it says a record low. And then as I mentioned, I sent you that tweet from Lynn Alden referring to let me see. I'll put this up right here. Zoom in here because she said she did some research on her own. Said Michigan consumer sentiment just came out at 50 for the preliminary June number. This is the lowest on record stretching back decades. So low I had to double check to make sure I was reading it correctly. It was 85 years ago.
Wow.
And so that's that's
Yeah,
a once in a lifetime experience right here, man. In
and
real time.
the Fed is raising rates into such an environment,
Hmm.
and they have no choice. And I think what Wall Street is going to get wrong, and a lot of the mainstream economists, they think that with this environment, prices are going to come down, or
Hmm.
what they call inflation. But I
Right.
think it's going to be the other way around. We're going to have stagnation, slow economy, and rising prices. It's the worst of both worlds.
Yeah.
And I think that's why gold and silver, even though they were hammered earlier today, they're making a huge comeback. I mean, I see gold here up almost $22,
Hmm.
silver up 23 cents. So it's very encouraging, the price action in the precious metals.
Yeah, 100%. And so just to think about all the financial products, ultimately speaking, are experiencing some difficulty in the narrative of them being safe and places to run. And even I'm hearing more and more people talk about what's going on right now and where we're heading. It really exposes the fraudulent nature of the mantra of buying the dip, because all dips are not created equal, and moving forward all dips will not respond the same way. So it's like that stickiness of like, do you go according to traditional financial advice, or do you want to stray away from that, just because you're basically you're playing against something that we've never experienced in the entire human history, because of all this product, everything being created in the products and the digitization of the markets and the currency creation and all that other stuff. So it's getting real
Yeah,
interesting out here, Mario.
I think there will be buy the dips, but it will be for the commodity space and precious metal space.
Yeah.
And you're going to be selling the rally in stocks and bonds for years to come. I think we
Right.
had a kind of a rally in the last 3 weeks or so in the
Mhm.
stock market. But if we bring up the charts here, I think I can bring one up here.
Feel
Hold
free
on.
to do so.
And it looks like it's keeling over. If you bear with me a second,
No
let's
problem.
bring the Nasdaq 100. Uh, let's have a look. Let me. Uh,
For those that are tuning in, definitely, if you are plugged in thus far, hit that thumbs up button. Show your support for the channel. Never
okay.
can go wrong. And then also, I'll see if I want to also highlight just the on my side while I wait for
Oh,
you.
here we go.
There you
You
go.
got that. So you
Yep.
see, we rallied here from towards the middle of May. We kind of held there, and we
Hmm.
bounced back up uh, towards the beginning of June, and now it looks like it's killing over again. And it's interesting how that line that I drew, that's an old head and shoulder line,
Hmm.
neck line, and it's amazing how we went right back up to that line and
Hmm.
failed.
Right.
So technical analysis sometimes does work. So
Hmm.
that's the Nasdaq 100.
Yeah. Now watch this. Just out of curiosity, you know, based upon that last leg being rejected and trending down, then the question is, based upon your TA charting skills, what's the bottom? What's the bottom? I forgot whatever.
Well, yeah, I don't think, from because I like technical analysis and I
Hmm.
do a lot of analysis, but I also listen to other people and
Hmm.
what they think. Because, like Michael Oliver, for example, he's got 50 years experience. I've got
Yeah.
about 30. And
Yeah.
he thinks that this bear market is going to be grinding, is going to really grind people down,
Hmm.
because you're going to have, it looks like we get another leg down. I don't know where it's going to go. Maybe the next couple of months,
Hmm.
maybe 2, 5, 10, 20% lower, but then we'll have another rebound and everyone's going to think, oh, it's over.
Yeah.
And then it keeps doing, back and forth and lower, for years.
Yeah.
And it, in the 70s, or from the mid 60s till the early 80s, the Dow basically range traded between 750 and 1000. It
Hmm.
was a really frustrating period. It was, didn't lose nominally that much if you bought dollar cost average, but you lost a lot against inflation. And I
Hmm.
think that's what we're going to see now.
Yeah, and just while you were talking, just I was trying to find a historical chart if I can grab it real quick. And so just using my little market metric here, and as of right now, looking at the SP 500 and just seeing how the last 10 years, due to quantitative easing,
Mm,
and unless this tightening is reversed and it continues onward, I'm not quite sure where the funds slash proceeds or capital that would be needed to keep this trajectory going upward coming into the markets. And so, I'm not a TA guy, but, if I would draw a little line this way of the prior bounces, we got a nice little downward fall, which wouldn't be pretty, at some point in time. Not sure. Yeah. I'm not a TA guy. I don't know nothing, but
I'm hearing, I saw a headline, some guy on Wall Street, analyst, mm-hmm. He's now looking at 3,500 for the end of the year for S&P. Mm-hmm. But the other thing as well, I noticed, I think the Fed published these wealth data, national wealth data, that the U.S. household wealth. Yeah. And the latest data they showed dropped by 500 billion. It was the first drop in household wealth since March 2020. We know what happened then. Yeah. And I think the other thing this is going to do is going to be like a vicious circle. The stocks and bonds go down. I think housing is going to join in, and people feel less and less wealthy, and they spend less and less. It's going to be a vicious circle. So it's difficult to tell where it's going to stop and whether the Fed will pivot, because right now it doesn't look like they can pivot because they've got this. They've kind of lost control of prices, or what people call inflation.
Yeah, here's that tweet I'm sure you were referring to.
Yeah.
That from Thomas Thornton out here. But so just the numbers, man. Numbers, don't lie. At the end of the day, they point and signal something. But so here we are now, and of course, here's a thought here, which I haven't touched about, which we haven't touched on much either. But just real estate is starting to turn over. As well. So I'm seeing more content creators talk about the real estate market and, things to be aware of and certain precautions. And I've witnessed in just my circle and from just scanning the airways, the repricing of listings because they're not moving fast enough. So a lot of people are like, literally now it's a race to try to outbid or not be out, or is it to lower your, your average, you're selling your house for, not to be outbid. And so it's just, downward numbers in as well. So, but it is what it is. Let's keep it moving, man. More things to talk about. Let's get to some more stories here. Let me pull up some other stuff here. Here is an interesting headline as well, just to play into the more of the sentiment or lack thereof as to what's happening in the streets. And also I played a video and I'll probably bring it up again just for the sake of showing you what the difference between Wall Street and Main Street and what people are actually feeling on the streets. But just a little headline here. It says most Americans expect inflation to get worse. And once again, like this is a statement based upon some very elementary metrics, because if people really knew how the monetary system operates and what money is or is not, as far as the difference between sound money and fiat currency, it's inevitable that things will get worse, just because the only way to keep things going is to continue to further inflate the currency base itself, to give the illusion of something stable and real growth, whatever that word means. So, it's just a lot of people are about to be in for a hell of a shock.
Yeah.
In a sense.
And I think you don't even have to know about what we know, monetary history, the difference between fiat currency, sound money. Mm-hmm. But if you keep seeing prices rising at the pump or in the grocery store, you can start buying more of those things, because you're going to think, wow, if I wait for another month, it's going to be more expensive. Yeah. And that in itself drives the loss of confidence in the currency. And that's what the Keynesians don't understand. The Keynesians think that if the bond market and Wall Street can keep break-even inflation expectations in 2 or 5 years' time low, that means there won't be any inflation. But they forget that it's the public that drives things, and they're going to be dead wrong, in my opinion.
Right. And so, speaking of which, let me just share this little video that I shared on a Twitter space. You haven't seen it. You may have seen. I posted on my page, so you might have seen it, may have not. But for the sake of just getting a real feel for what Main Street is talking about. The
Biden administration has been telling us that America is in one of the best spots that it's been financially and economically.
Since I took office, families are carrying less debt. A recent survey from the Federal Reserve found that more Americans feel financially comfortable than any time since the survey began in 2013.
Comfortable? Look at the gas prices. They ain't comfortable to me. Hell no.
Joe Biden says that we're in a strong economy, that we're doing great. Do you believe that?
No. We're not financially stable, comfortable, or nothing like that. But when Trump was in office, I was feeling really good.
Really?
Yes, Trump.
All right, so I'll leave it at that. But I had to play that one.
Well, I saw, I think it was a reporter, Wall Street Journal or something, at the White House press conference, and the new White House speaker,
yeah.
she said basically the same thing. Things are great.
Yeah.
And this guy said, well, we've got the highest inflation in 40 years. Is at the pump are really the highest ever. What's so great about that? And,
Yeah. Let me, Mario, I don't want to leave you hanging, man. And let me give you a little bit more.
What I'm trying to say to you is that the economy is in a better place than it has been historically. And so we feel here at this administration, and other experts as well, is that we feel that we are in a good position to take on inflation. What we're trying.
Mario. So I didn't want to leave you hanging, man. I had to bring that one out.
That was her. She's got a massive hairstyle and stuff.
It's amazing that at this point you can get up on national television and read off a teleprompter or just freestyle and just say things like that, and no one calls them out, and even the fact checkers don't even bother to go that direction with just debunking those lies. But then again, if Alternative or anybody else come out and say some things to contradict that, fact check.
There was a reporter there that called her out, though.
But see, so here's my thing with that. Even the same role people, it's this one guy who looks like a mannequin who sits there, and he's the only guy that seems to be playing hardball. But then again, it's just like it's that dog and pony show. It's like he talks big, calls them out, but nothing. But it's like, what are you even there for? Because nothing comes about from it. Like nobody runs with the story really. And
only the alternative media runs with it.
Right. Good guy, bad guy stuff. Anyway, so keep it moving. What else we got going on here? More stories, of course. So just we can't, we take it for a grain of salt. But this number. Let me get this out of here. This number here. Did it surprise you? Because a lot of people, for some reason, I don't know, I'm not sure why, but they were saying that they're expecting a downward trajectory of these CPI numbers because of the tightening, because of it was a supply chain bottleneck, and it's the supplies are starting to flow now, and so but once again, were you surprised whatsoever, and do you anticipate this number continue to trend in an upward fashion, even though they have all the other monetary experiment stuff unraveling?
Well, the number was expected to be unchanged from the previous month, which was 8.3%.
8.3, yep.
Yeah, and I think the thing with Wall Street, they look at these things like break-even inflation expectations and stuff, and they see it going down, and they seem to think just because it's gone up so much is going to come down. So, and I think they're in for a big surprise, as I said, because with the CPI running at 8.6, interest rates should be more like 10 if they really want to stop that. So until the Fed funds and short-term rates go up to 10, that won't stop. But these Keynesian economists and Wall Street and central bankers, they think that if they increase rates to 2.5 or 3, it's going to stop 8.5% price rises, and I think they're deluded, and that's going to be their huge mistake, and that's why gold and silver and other commodities are going to go to the stratosphere, because people are going to lose faith and confidence in the currency, not because gold and silver and commodities are any better, but they're going to be still the same, but the currency is going to melt down.
Right. And just talking about once again, the number we've been given, 8.6. Now, if we were to go to Mr. John Williams, we're already, off the charts. We're off his charts. If you look at the number of what, the actual number would be if you measured it, yada, yada, according to yesteryear's measurements. But it's going to be hard. So like even looking back at this little chart here, it was somewhat parallel or it was moving smoothly together, but yet just these numbers here make it that much harder to try to keep this lie going, because now when you get into 9 or maybe 10 according to their numbers, that means we're in 1920 more than likely in the real numbers and what people actually have to pay. So
I guess we can blame Mr. Putin for all that, right?
100%.
All the money printing the Fed has been doing since 08.
Right. You know what? So like right now, I was combing the Twitter sphere, and the CPI was trending. Right, it's trending right now. So I'm actually looking at all these mainstream economists and whatever you want to call it, sharing their 2 cents. And I came across Jack Dorsey, and his comment was, how can you really measure this? But like, it was something like that. And I'm thinking like, I got so many thoughts to share that I will be caught up in all this craziness. But just thinking about how people are now starting to actually focus on the number as if it's like completely shocking, when I love to just refer to my visual aid, referring to how we have been experiencing compounding inflation well before now. And it's just unfortunate starting to make attention, but it's been going on for 100 years.
That's why maybe I've annoyed a lot of people, because I keep going on about the definition of inflation. I think it's one of the reasons why everyone's so shocked now, because we've been told the last 30 years that inflation is the CPI. So they doctor the CPI and they say, oh, look, inflation's low, while the money supply has been going through the roof. So I've always said, yes, a lot of that money and currency went into financial assets, but now it's flowing into real things. And the analogy for me is that, the Fed and the economy, they've been on an eating binge. And only now they've looked at themselves in the mirror and they've seen that they put on loads of weight, and they're totally shocked. Prior to that, they weren't looking at the mirror because the stock market and bonds were doing well. So everyone thought they looked good, but now they looked at, pulled the curtain and they see there's a big, very fat and obese person almost dying, and they're trying desperately to lose weight, but I think it's going to be too late.
I
apologize I'm not trying to be like offensive to people who are it's just an analogy.
Right, 100%. And so so as of right now, as I'm looking, it looks like on Twitter, recession is trending. And so, like, to me, that's a very nice way of looking at what we're experiencing and what is yet to really unfold. Because the fact that we're being sold, and it's recession, the word recession has been used a lot by a variety of, news pundits and economists. I'm thinking like, wow, like that's just a good way of trying to paint the picture of what's actually occurring and what's coming. But I'm thinking like, if you magnify that, because it's just not a one country event, it's going to be something way worse than what we can imagine possibly.
Worldwide. I mean, we got a recession here too. And I guess Jamie Dimon was right last week when he mentioned the storm coming, the hurricane.
Yeah.
I guess he knew a few things beforehand.
Right. The storm is coming, and we talked about, what category would it be? And so according to what the record books is used to, it's category 5, as you mentioned, is the highest that we have seen. But, once again, we haven't seen on a global scale a global hurricane sweeping the entire planet. It's going to be something different. But anyway, so, and to that point, it's all going to cause a major repricing of everything that is being priced in fiat currencies, which is everything we do in our lives. And, I think it has to be the breaking of the manipulation tools used to suppress these prices, because it's going to be hard. Like, I imagine it's going to be very hard to have days where the markets open up and there's these big sell-offs in gold and silver when the world around you is crumbling. It's like, I just don't see how they can pull that off, but they've been able to do it this long.
I think this manipulation, and it's not just in gold and silver, it's in all of financial assets, and it's called leverage. Like I was watching a video earlier today. Let's say JP Morgan holds $1 billion of treasuries. They can use that as collateral to lend money, but we will lend 100 billion. So they're always leveraging. So they do the same thing to gold. They've
Yeah.
done the same thing to nickel and other base metals.
Yeah.
When people want real things and they actually want delivery of it, this fraud, this lending things that you don't have, it's exposed. And I was reading, I think, an article on Zero Hedge from this week. I think they're talking about, I forgot which base metal, but in China, they've got warrants for, and it's supposed to be for real metal in the warehouses. But instead of lending, let's say they have a ton of nickel warehouse in China, they've been like lending this warrant 10, 15 times over. But when someone comes with a warrant and says, I want the physical metal, and they don't have it, they're in trouble. And that's what happened in nickel. That's what happened to Rafi Farber and the guys who tried to take delivery of just one silver contract. They were given the warrant, but they wouldn't deliver them the silver because they probably don't have the silver.
Right. They more than likely don't have it. So speaking of which, it brought a thought to mind. I didn't cover this much, but just type this in real quick. So this is 3 days ago. It says London Metal Exchange hit with 2 U.S. lawsuits over nickel trading chaos. And so it says the firm from the U.S. market maker comes just days after hedge fund Elliott Associates filed a suit for $456 million relating to the same chaotic morning in March. So once again, is this something that can break the manipulators back or what? Like, how would this unfold, you think?
I did cover this earlier this week on my channel, and I think what it does, it gives other exchanges and other people out there who might be manipulating any commodity, they'll take notice because they say, well, we could be, the CME or in COMEX could see that and say, wow, guys, we got to stop this now. And the only result of that will be that there will be a lot less paper selling. And so we could see this could put a nail in the coffin of this paper game, and we could begin to see real price discovery. And where that will go, I have no idea, but it will be a lot, multiples higher than where we are, especially in silver.
Yeah. Speaking of which, did you see that? I'm sure you saw that video that we were both tagged in, where that guy talked about liquidity, how you can come up with liquidity at any time, anywhere, like just out the blue. Did you see that video?
The collateral.
Yeah,
that's the one I was talking to you about.
Okay, yeah, because I was about to play that because that just came to mind.
He doesn't have too many views, that guy. Yeah, but yeah, that's how many people don't realize that's how Wall Street in the city of London work. It's all leverage, and that's why we had the collapse of 08 because they leveraged so much. The banks were going to go under, and we had to bail them out. And they're still doing the same thing. But prior to 1999, you had Glass-Steagall, which didn't allow commercial banks to be involved, in this kind of stuff. But then the Clinton administration repealed Glass-Steagall, and look at all the crises we've had since then.
Right, 100%. So for those that may not be familiar with that, I was going to play that video real quick, just so they'll be a little bit more familiar with what you're referring to. Here we go. I'll just play it real quick.
Fundamentally, the wholesalers are providing infinite liquidity at the NBBO or the inside price. So,
infinite liquidity?
Yeah.
Where do you guys go and buy infinite liquidity from? Is there an infinite liquidity store? Maybe I need to Google this or something. Infinite liquidity? I don't understand.
We get an order for 1,000 shares in Reg NMS stock that no one's ever heard of. Yeah. And there's 200 shares on Nasdaq in New York. We fill out 1,000 shares at that inside.
So let me get this straight. Your infinite liquidity is that there's no shares available, so you guys fill it anyways?
55% of the orders that we received, Bob, we provide size improvement in a complete exchange.
This guy should be in jail. I mean, he shouldn't be on TV bragging about that.
But that's the thing. When you get to the point where you're at the end game, you can say whatever you want because when everybody's in on it.
Someone calling me, I'm a car salesman, and I said, "Oh, I want to buy a Tesla." Yeah, don't worry, we got 50 here, and we've got none.
We got none, but just pay us up front, and we'll give you a future delivery date. Next would be 2 years from now, if that. Yeah, but anyway, man, this is what it is. So let's keep moving. What we got here? More stuff. So let's touch on it a little bit because you sent me some other things. And how would this right here? Oops, let me get this out of here. How would this? I've been noticing this a little bit. They've been pocketing certain lockdowns, certain regions, certain states. Yeah. So, man, like, you know what I mean? That's zero policy, man. It has to be hurting from the inside out, or what are you thinking? Like, why they continue to prolong this when
I don't know. I mean, I sent you this because I thought this was over, and I thought it was significant. I think what it will do, it will disrupt even more the supply chains worldwide. And it's going to be even worse for the US, for the UK, and Europe in terms of getting goods from China. Yeah. But, 11 cases in a city, I don't know.
It got to be millions.
20 million people at least.
Multiple millions. And so it's just that it's something different happening over there.
Everything but it goes to show that in the crack up boom, in the collapse, all the news seemed to be negative. There's no good news.
Right.
Not just from China, but
just in general, right? Like, the airways are filled with, negative news. And that's why on my side, I've added more of the good news, literally like the good news, meaning scripture based, but just because I got to shake stuff up. But let's get to this question real quick from Chris. Appreciate you, man. It says, if the Fed does pivot in the fall, we know gold and silver will explode higher. Will commodity and commodity stocks go along for the ride?
I think so. And I think today, for example, gold and silver are actually kind of exploding higher, even though they're hammered earlier. But I think, commodities are going to continue higher. But if the Fed pivots, I think gold and silver will outperform the general commodities only because the general commodities have been outperforming gold and silver for the last year or so.
Yeah. And so, I would think, given, the current environment we're in, it would be hard to continue to suppress the price with all the future paper slamming that happens, every once a week, whenever, every day now, whatever it is. And so definitely we would hope and assume that things would reveal truth when it comes to the actual prices of metals. But I guess the real game changer will be if silver happens to really break loose, because gold has been doing its thing. It's expected to do its thing. But if silver was to ever be unleashed, as far as even, compared to its previous highs, where it's nowhere near, if that was to occur, then my goodness, like we wake up and it's 30, 40. It's like what's, what number is it today? Like type of number. That's something in the world bad.
The other thing about if silver does break out, and I think it will, through 30, it will go up very quickly. And you won't be able to get any, any of these, or 1 ounce silvers because the dealers, they're going to stop dealing because they don't know, because the price could go up $10, $15, $20 in one day and then drop 10, go up 30, and they will have no idea where to price the metal. So they're going to, and they know it's going up. So they're going to keep a hold of their silver. Right. That's what I think if you're on the fence and you're not sure about buying silver or gold, I think you still have a bit of room, but that window is, it's closing very quickly.
Right. And I've always been saying for several years now, the actual price of getting something physical, when you factor in the premiums, wherever you're at, it's as cheap as it's going to be, because even if the spot price was to be slammed down, the dealer's going to have to make up for that in the premium. So right now, silver is the cheapest that you can ever find it, because at some point we will see a chart where this current number will be well off the chart, like John Williams from Shadow Stats, to where it's going to make these prior highs look like baby steps, like on some Bitcoin type gyrations where it's off the charts. And of course, that world we live in at that moment, I'm sure it won't be pleasant, but at least, from a financial standpoint, you'll be able to, hold some things down for yourself moving forward. But all right, let's keep it moving. So let's open up the questions. Let's get some thoughts, ideas, some questions out here. Who got some things to bring our way? So feel free to, let me get my little things going up here. feel free to throw out some thoughts, ideas, suggestions on what might have come across your radar this past week. Let's touch on it, and we can keep moving. And so of course, I see some talk about Bitcoin. So this week, Mario, I've been really engaging a lot of people about Bitcoin and just the concerns I have because it's taken on a new life of its own. And I just recently posted a post that came from Michael Saylor, and I'm thinking, like, people need to be very, very, very leery of this guy, man, because not only am I questioning his initial intention, but because he's become the spokesman for crypto, it's very problematic when he comes out with statements like this, saying that Satoshi opened a portal into a digital realm, allowing energy to flow through and bringing life to cyberspace.
That doesn't make it. That's a lot of platitudes there.
Yeah.
I mean, one thing about Michael Saylor, and anyone can look at it. It's on the Wikipedia. He started his career out. He did really well at DuPont. DuPont. That's one of the big aristocratic, if you want to call it, American families.
Yeah.
And that just smells a bit to me. I don't. And the guy who tells people to leverage and mortgage their family businesses and their homes to buy as much Bitcoin as you can. I don't think you should listen to someone like that.
Yeah, I reply, real nicely on my side. Just so this is the type of stuff I'm talking about, referring to all the stuff I've been talking about all week, which is just giving people to think outside the box a little bit. I said this is some spooky occult type stuff. Oh man, but keep it moving. Super Seamster, appreciate you. Says get your weight up. Happy Friday. Peace. Appreciate you, man. Way to be a blessing. MasterCard. Mario, did you? I'm not sure if you've seen that MasterCard is working on a biometric identification way of paying, where you can just like put your face up.
Yeah. I mean, the thing is, it's not only going to be MasterCard that does that. Probably,
right?
It's be all of them, Visa and
right.
Diners, isn't it? Do people still use Diners card or American?
They probably adopted a blockchain, or going to, and they probably going to install a Lightning
I've
Network.
noticed that here in some supermarkets, they have self checkout. You go to the self checkout, and there's a little camera, and you can see yourself in the camera. And I always put my hand in front.
That bothers the heck out of me.
Yeah. Why do they want to see me?
Right. For theft verification, just in case you got a stolen car, they can say they can have who that person is.
What if I pay with cash though?
Right. So yeah, that's even worse. But yeah, man, lots of interesting things. So speaking of which, like we can't not talk about the other space. Let me just refresh the page, and feel free if you see thoughts or questions, ideas. But according to it looks like Bitcoin as of now hasn't decoupled from the U.S. indices as of yet, because it's red as well.
Wow. It was, earlier I did check it out before we started. It was around 29,300. So it's it doesn't look like a safe haven monetary asset, does it?
Yeah, but I think a lot of people, the Maximus especially, like that number 29,000, they'll always use that number to say, look at where it's come from. And we just had a momentary adjustment. Think about 10 years from now, it's going to be 1 million, 2 million. That gives people hope.
Yeah, I agree. It's come from very low, but it's also come from 69,000.
Right. So it's just the words is used to describe how don't focus on the price, the tech, and then they use it's math. It's immutable. It's divine. Like it's 21 million. That's that's law. It's code. It's from the book of Satoshi. Like that is spooky, man. Anyway. Keep it going. So feel free to throw out some ideas. Wally says, Diners card survived for years as an official charge card for the federal employees.
Yeah, I think I had when I worked for Citibank in the 90s, we were given a Diners card, but no one accepted, no restaurants or anything. It was a useless card here in the UK, at least.
Yeah. Quantum. Yeah, quantum and AI will definitely be a game changer for these version ones of crypto, because none of these projects here are ready to defend itself against a much more superior computing force that is able to exceed the SHA-256 protocol, all that other technical stuff. So, and I don't really think, you know, the Bitcoin community will be able to come to consensus on how they will be able to upgrade the blockchain in time to defend itself, as well as whatever type of events might occur in the future. Because the more the institutions get involved, the more they're going to take over. Big money will definitely take over, like it always does, if they allow it. So adoption will come back to bite them in the rear end, and they don't even see it coming. Anyway,
blockchain isn't a bad technology, but
right,
when we're talking about currencies, the important thing is what backs that currency. You know, what asset.
right,
So if you have air backing, you know, that currency, it's what's the
right.
point?
And that's
But
the thing. They using like that means it's the community uses such technical talk, like, you know, math, like the immutability of the blockchain. Block confirmation every 10 minutes is undisruptible. It's like they'll be so sophisticated. I'm like,
they also can keep track of you every second.
the fungibility side, man. Like,
there's no privacy. And they talk about, you know, the Byzantium general's dilemma that, you know, no one can really betray you.
right. Which, you know, if used for good, can serve purposes. But it's
I
like,
think
man,
the whole problem really with our financial monetary system is trust. And that people seem to think that with the blockchain you can solve that problem, but I think it's more of a human nature problem. I don't think we'll be able to trust everyone all the time, but the people, you know, we need more trust, and it starts at the top. I think if we can't trust our policymakers and our you know, people who are supposed to serve us in government,
right,
then you can't really trust anything.
right. Because the same players is the cause of what we're experiencing now will just ultimately take over and continue to control the same thing. So, you know, and as one of my mantras is, you know, money is the least of our concerns. At the end of the day, it's all about the governance crisis. Like, you know, our leadership or lack thereof is the reason why we're here, because they'll let big industry, big tech, big banks come in and, you know, just basically line their pockets up, and they just hand over the world.
We'll see that guy who came on, you put the video, they wanted to buy 1 Bitcoin. We let them have 1,000.
Yeah. So how will fractional reserve Bitcoin bit lending and whatever else not somehow make its way in once that spot ETF is approved? Like, it's anyway. So let's go. What we got here says the people who create the system can always get around it. They are using Bitcoin as a false sense of trust. Yeah, I wouldn't be surprised at it at all. What else? So feel free. We got here. We have about 40 minutes or so. So any other thoughts, ideas, suggestions? So Mario, let's look ahead a little bit and, you know, and see what's we got. The Fed, I guess you mentioned earlier about the talks of a 75% or a 75 point hike, or that's just talk or projection, or what you thinking?
Next week it's the FOMC meeting. It's Wednesday and Thursday. And I just saw a headline from Zero Hedge that Barclays Bank is calling, just because of this CPI number, they're saying that the Fed will do 75. I personally think they'll do 50. I think what will be more important is to see what the projections they make, and also what Jay Powell says during the press conference. But I think they're way behind the curve anyway, you know, and things are going to get worse in terms of the economy, in terms of rising prices. And and just keep an eye on those government bond yields. You know, they're pointing to a massive recession, I would say.
Yeah, and assuming the equities will continue to have some extreme volatility, and it'll be interesting to see, and it'll be a good indicator as to how metals, in particular gold and silver, respond within this time frame as well, because for some reason I'd imagine, you know, come Monday or whatever, it's going to be a, you know, major sell-off, and, you know, they're going to drop, you know, was it 3 million contracts out or something like that, you know, but then again it's going to recover back. So the recoveries are a lot quicker these days. So it's we're going to find out.
I don't know, I just think in the last couple of weeks, you know, gold has been stuck around 1850. Silver between, you know, is trying to go above 22, and they're not really going anywhere. But everything else is like all over the place, and I think it's showing people that there is a bit of stability in gold and silver, especially when you look at cryptos. Who every time the stock market gets sold, it gets sold as well.
Yeah. Here's a couple questions real quick. So, Wally, let me see here. It says, any advantage to coins over stacking? Any advantage to coins over stacking?
It's the same thing, coins and stacking, isn't it?
Yeah, I'm not sure. It's like, so Wally, let me know if you want to further break that down.
Maybe he thinks stacks is bars, but
Or yeah.
you can stack coins on top of each other as well. They're the same, coins and bars are the same, and it depends. Someone who's a billionaire will probably buy one of those 400-ounce bricks of gold. Someone who's got $20,000 will buy a few coins.
Yeah.
So it's just a personal choice, I would say.
Right. As well as, your ability to secure and store those things, because, confidence in storage is going to be an issue in the future. How much silver personally do you think Jamie Dimon has, if any? Oh, Jamie Dimon, my assumption would be he definitely has a well-diversified portfolio of a lot of things, including, getaway plan, island, and a vault on the island. And, he probably he has a cold storage wallets with lots of Ethereum, because he's, he was an early, he was one of the seed investors through that EEA. And so he's definitely has a nice little digital wallet holdings as well. So he know what's coming. What else we got here? Any other thoughts here? I said mortgage. Let me see here. So let me 21.98. Any other? You see anything out there? Wally said coins over bars.
He likes coins over bars. All right.
Yeah. Let me see here. Let me see. So that looks like I don't see any other questions that stand out, or if I'm missing something. Any thoughts on the global cabal currency evaluation? Has that even happened?
Yeah, I think it's been happening, for many years. And what people don't understand that is the only really money or currency that the dollar can be devalued against ultimately is gold. And I was looking today at some numbers. Back in 2006, the dollar index was 85. Now it's 103, but gold at the time was $600, and now we're like almost 1900.
Yeah.
So I think people need to not let the dollar index, distract you,
right?
Because all these fiat currencies are going to devalue, and they've been devaluing. And people who keep saving in fiat currency, they're getting shortchanged in terms of purchasing power.
100%. I look at the Dixie is just a trade weighted index. Like, it's just you take the fiat currencies that's needed for the system and all the trading and all the complication stuff, and that's how they determine which one's better than the other one. But they're all going downward because they're they've been weaponized. So, all right, it says Mario has a great book recommendations, but Mike never says what he is reading. What books are you both reading right now? What book am I reading? Like I mentioned last night during one of my rants, I'm heavy in the gospel.
I'm reading this one right now.
Power and Thrones. Yeah. So yeah, like just
the new history of the Middle Ages is very interesting.
Is it good?
This guy has written a book about the Knights Templars. It's a good book. It's history, but it's not boring reading. So
yeah. I haven't read much casual or just for fun reading. I got like a lot of stuff here, some stuff here, but it's more like prep stuff.
Yeah.
But I'm more so in scripture these days like never before, just because.
I wanted to show you this, Mike. Someone sent me this Rumpelstiltskin, one of my followers in Japan. He's American, but he lives in Japan. He sent me this the other day. It's from August 30th, 1971.
Really?
So this is the Newsweek for Asia. They're talking about, when the Nixon shock. It's really interesting, isn't it?
Wow, that's a history piece, man. You can put that.
The price of it, for the U.S. forces in Japan, Okinawa, you could buy the Newsweek for 50 cents. But they don't go much over, the gold situation. But they talk a lot about the price freezes. For example, the unions were not very happy because it froze wages and prices. And the unions weren't happy because they said, well, corporations are going to benefit from it, but labor isn't. But it's annoying. It's interesting that they say, well, it looks really positive, doesn't it? The new dollar, you've got
Yeah.
smiling, and you've got Nixon's recovery plan. So I could see them doing the same thing for the new digital dollar,
CBDC. Yeah.
and
Like, but how do you? Yeah, because it's not an actual tangible product. So how? I mean, it's going to be like some computer code and some
but this
happy
wasn't
families.
tangible either. It was just a piece of paper, or it is a book entry. No more gold.
Yeah, yeah. Good point, man. That's a piece of history in your hand, man. That's amazing. He got that, and I'm assuming just somebody probably let it go for a little bit of nothing because they didn't realize.
Yeah, well, he found it in a little store in the middle of rural Japan.
Really, man. That boy is. I'm sure has a nice little numismatic, not numismatic, but historical value to it. I'm sure, whatever that's called. But anyway, all right, man. Let's get ready to dial back. As always, I appreciate everybody for hanging out with us. Any last thoughts to leave us with before we head to the weekend, Mario? Or
yeah, I was actually I went out today and into this shopping center near where I live, and I saw, because there's a lot of empty shops, but I saw one of them has been like they're gonna reopen it, so they had loads of people there working, putting things, and I thought about when I started my business, the pawnbroking business in 2012. I went through that, had to rent a shop, redo everything, and it was a big mistake. And I thought about those people. I hopefully, they're not making a big mistake. But then I thought, if you don't make mistakes in life and if you don't try things, you're never going to get anywhere. So that's the other thing. You can't be scared of doing things. If you never try anything, you're never going to get anywhere.
Right.
But be careful, of course. That's my 2 cents.
Right. And I also notice a lot of small startups, mom and pops, entrepreneur places, having a dream, and they got their little symbol up there. I'm thinking like what an interesting time to enter into the marketplace at the same time the monetary system is coming down, because depending on whatever you're serving the world, like will it be a need in the midst of all the chaos around us, to where it's going to be a lot of shattered dreams and closed stores. Like they won't, it's going to be hard. You know what I'm saying? And that's what I'm like, more power to them. But yeah, it's just a part of life. So you have to go through it, and maybe your business might be the one that rises to the top. And
just a quick example: Jack Nicklaus, probably the greatest golfer ever. Some would think it's Tiger, but he won 18 major championships, but he finished second more than anyone else. So you have to fail.
Yeah,
to learn.
Good point. Good point. Well, people, as always, it's been great to connect for this Friday Mike and Mario show. And for those that don't know, Manico64 on YouTube, go find them. And for me, Rethinking a Dollar, wherever I'm, just type it, it'll come up somewhere. But anyway, be blessed, be safe, and have a great weekend. And we see you guys next week. Well, of course, we'll have more stuff to talk about. See you guys later. Peace.